What is up? What is up? What is up, everybody? It's Charlene FX, your favorite female trader, back with another video. So I kind of noticed that a lot of the informational videos that I've been dropping lately have been more geared or tailored towards the more intermediate or the more advanced trader, and I'm kind of leaving out my beginners, right? I need to put some more stuff out that's going to help the people that are just getting started, just getting their feet wet with learning how to trade forex. So I'm going to be dropping a series of videos here that are going to be strictly going over beginner topics that will help you better understand, the more important basic things that you need to know when you're getting into this forex trading game. So before we get into market structure, right, which is one of the more important topics when you're beginning to learn how to trade, we're going to jump right over to my sponsor of this video, which is my broker, Hanko Trade. They're an excellent broker. They offer forex pairs, indices, commodities, crypto, anything that you trade, they offer it. They're on MetaTrader 4 and MetaTrader 5. Don't be afraid, guys. You guys can download the 4 and the 5 off of their website because it is no longer available on the Apple Store, as many of you use Apple products. For those of you that use Android, you should be fine. But for those of you that don't, there you go. All right. They offer ECN Plus accounts, and also SCP if you should need it. Very low spreads, very small commissions, quick deposits, quick withdrawals, and live help should you need it on their website. Okay, guys, I've been using this broker for several years. Haven't had a single issue with them. I really, really like them. If you're looking for a reputable broker to help you move forward with your trading accounts, this is an excellent broker to go to. Just go ahead and use the link in my description box to go ahead and sign up for them and get trading right away. All right, now that we got that monkey out the way. um, let's talk about market structure. Okay. Market structure. What is market structure, right? Market structure is the behavior, condition, and current flow of the market. It highlights support and resistance levels, swing highs and swing lows, and it identifies a trend that is simply a consistent direction of price movement over time. And market structure can tell you if the market is trending or not. Okay, so that's a pretty basic definition of it, but that's the gist of what it is. Okay, you really have to understand market structure to be able to understand the way the market moves and how to calculate your trades, knowing when to enter your trades and when to exit your trades. The most important aspect of trading when you're beginning, guys, is understanding the direction of the market. What direction is the market going in? Understand that every single time frame, from the 5 minute all the way up to the monthly, all of it has structure. All of it has market structure to tell you exactly where you think the market is going and how you should structure your trade. Okay. Now, first thing you also want to look at when you're looking at market structure is the market moving up? Is the market moving down? Or is the market moving sideways? Okay. The best way to identify that is just eyeball it. Basically, eyeball it. Look at the market and say to yourself, okay, is the market moving up or is the market moving down? Well, if I look at the market as a whole here, I'm looking at it here and I see at one point the market held resistance over here at one point, right? We were held resistance here, and now we are now holding support right around this area here. All right, so obviously we're bullish. All right, the market is moving bullish, and that's something that you want to identify. Now, once you identify the trend of the market and how the market is moving, at that point you want to go into the structure of the market. How is it creating higher highs? Is it creating higher lows, or vice versa? Another thing you want to identify is the market. Let me finish off these levels here because they matter. All right, another thing you want to identify is the market actually consolidating? And if it is, can you find a trade inside that move? Because even though we look here and we see that the market was trending for a while and the market looks like it's consolidating here, at some point it was creating new highs and it was creating new lows, okay? The market moves in waves, guys, all right? The market moves in waves. The market does this, 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 right? Or it does this, this, and this. Or it's going to do something like this, sideways. Okay? So you need to ask yourself, is the market making higher highs and higher lows, and or is it making lower lows and lower highs? And if it's doing one of those, or whatever it's doing, is there an actual trend where I can enter in the market? Is structure being broken? All these things actually matter. Okay. So if we're looking at GJ, I like to use GJ because GJ is a very popular pair amongst beginners, even though it potentially should not be. It's a very volatile pair, but it's a very popular pair, so I'm going to use that for example sakes in this video. So if we're looking at GJ here and we're seeing that GJ seems to be in a bit of a consolidation right around this area here where price is just kind of holding right here, even though we're holding a level of support here and we have a level of resistance right here, does that mean that we can't take a trade because the market seems to be moving sideways? No, it doesn't, because even though you have a market that may look like it's moving sideways and it's not really pushing in any particular direction, there is always, remember this rule, guys, there is always a trend within a trend. Okay, if I pull in the market here and we're looking at market structure as a whole here, you'll see that we continue to push and hold levels of support as price push bullish, right? We started way down here at one point, right? The market was at its lowest point down here. We created a level of support here, right? Price held support, created high after new higher high. Price continued making new highs, right? And we formed a newfound level of support. Price bounced on that level for a while, created resistance, and at that resistance created another level of support here. So we have three different examples here of price pushing bullish. So even though it was holding a level of support, which you need when you're looking at the markets, you still need price to be creating some sort of trend. Okay, so if we look at market structure inside here, let's use this for example here, you'll see that we were holding a high at this point here, we were holding a low at this point here, but even inside this range here, we still have structure being formed. We have a low here, we have a high, right? We have a kind of minor low here, we have a high, we have a low, and then a high, right? We failed to make a new high, so price continued down, made a low, right? And we made a lower high and then a lower low. Lower high, we'd failed to make a new low, so we came down, created a newfound level of support, and then we pushed up and created a new high. So even though this isn't the cleanest and it's not, the most perfect looking structure, it's, the market isn't going to give it to you that easy, right? They're going to make you work for your money, right? But even when it does that, the market is always going to tell you what it wants to do. Okay, when it's telling you, hey, we're unable to make new highs, and you see price creating lows, obviously you should be looking for your resistance levels to be formed for you to be looking for your selling pressure. Okay, and vice versa. If you see that price is failing to make a new low after one low was created, then you want to look for the price for the market to reverse. Okay, so let me erase this real quick and I'll show you guys what I mean here. So we see that price made a high here, we made a low, we made a higher high, and we made a higher low. Okay, if you look at this low here is at the same point that this low was right here. Okay, same point. Price came down and tested this low right here. Now, for market structure to maintain, you need price to continue up to make a higher high. Okay, so we have a high here, higher low. We have a higher high. Each high needs to be broken for your structure to be maintained. So remember earlier when I said price needs to do this, 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 you have this high breaking this high, you have this high breaking that high, you have this low being respected, you have this low being respected, that low being respected, that low being respected, and so on and so forth. So when you're in a bullish market and you have higher highs and higher lows, you have bullish market structure being formed, you need price to create a new high. So if price came here and made a high, as soon as it came down to make a low, your next plan should be for price to continue up to create a new high, meaning you want this high right here to be broken for market structure to be valid, to maintain. And in order for that to be valid, you also want your lows to be respected as well, because if you have a low that is broken, then you have a break of structure. And typically when you have a break of structure, you have a change in trend, a change in direction, and a change of bias as well, or you should at least. All right, so now that we have this high here, we have a low that was formed that tested the last low, and now price is pushing up, creating a new high. Now price came down and made this low, it tapped the same low again, once again, and it came up, created resistance at this level, and then broke structure. Okay, structure is officially broken at this low. Once structure is broken, you're looking for price to retest and either continue down. Now, is that always going to happen? No, obviously it didn't happen here, Okay, structure was broken here, but price only tested and then continued to push up. So even though you have a break of structure, you still need to wait for your candlestick confirmations. That's a whole different topic in itself. I'm not going to go into that, into in the intricate details of that. I don't want to confuse you guys on this video, but for the most part, guys, all you need to understand is that even though you have a market structure that looks like it may be consolidating or just ranging in one direction sideways, you still can find a trade within that structure if you know how to look at the way the candlesticks are forming and the way the structure is forming as well. Okay, and this is on the daily time frame, right? So if we drop down to, let's say, I don't know, the 4-hour time frame, can we find structure with that as well? Now, the higher the time frame you go, the less noise you're going to see. Okay, the market just looks cleaner on the higher time frames because there's a lot less candles, a lot less noise going on, a little bit more clarity, and the higher time frames are what's going to help you to understand how to form your bias for you to find a good trade. Okay, so if we're looking at market structure here, let's say, well, let's do the 1 hour, right? Let's look at the 1 hour real quick, right? 1 hour is a little bit more clear, right? So if we look at the 1 hour time frame here, you'll see that price was bearish, right? Price was dumping, pulling back and dumping some more. Okay, so the first thing you want to identify is what is the structure. So look at structure, and to understand your bias, you want to pull in your chart completely, actually get a good look at the entire market to try to understand which direction the market is going in. At one point, you'll see here that the market was holding resistance at this area here. Holding. We finally broke this level. We retested it, we dropped, we tested it again, and we dropped again. Okay, so if you understand market structure, you'll say to yourself, okay, price was pushing bullish at this point here. So if price is pushing bullish, we have price creating a high, a low, high, a low. And then we have a low here, but we have this low that was broken, which means what? Break of structure, right? Structure is broken. So when price is broken, structure is broken, you want to look for that retest and then the drop. Pushed up again, created lower lows and lower highs, dropped, tested it one more time before it completely plummeted. Okay, so this is a great example of it here. Okay, great example of market structure and then structure being broken and then price trending in the opposite direction. These are the things you want to be looking for on this exact setup here that happened here on the 1 hour, that was clear as day. You can see that same thing on the daily, the weekly, the monthly, because even though the higher time frames are the most important time frames, the lower time frames are what form the higher time frames. So they're both, equally as important if you really think about it. But at the same time, you understand and you see things a little bit more clear on the higher time frames, and then it helps you drop down to your lower time frames for you to be able to, understand what you're looking at and how to form a trade idea. Okay, so if you take nothing else from this video, guys, just learn to look at the chart as a whole. Try to understand where price was pushing direction in one direction and what happened to make it switch directions in the other way, and what you should be looking for you to plan your trade. So for example, if price is pushing bullish here, you should be looking for a price to create supports to respect your last level of major supports, right? We have a low that was formed here, so we want price to hold that level. So as long as price holds support and it continues making new highs, breaking previous highs, then you know that you can look for your buys, right? And then once you see that your levels of support are broken, then you have to say to yourself, well, hey, price was pushing bullish at one point. Now we broke support, we broke our last major low, and now we have price retesting and breaking back down. You can literally be an excellent trader if you understand this concept all by itself. You understand market structure, you understand how the market moves and how to find your highs and your lows and your break of structures. You can understand and you can predict what you think is going to happen and be able to take very, very high probability trades. All right, guys, so that's market structure with this video. I hope you guys learned a lot from it. Please like, please subscribe. I'm going to be coming out, like I said, with a lot more beginner topic video for you guys to really, understand, those of you that are starting out new. But these things are all examples of things that are going to help you excel and become better as you progress in your trading journeys. All right. My course information is below. I do have a Signal group if you're interested, below. And once again, my broker, Henkel Trade, the link for that is below as well. All right, guys, you guys have a good one, and I'll catch you guys on the next one.